copy of this to watch again. If you've got nothing better to do. It's good to watch these again and again and again because what it is the way that we take in information. I don't know if you guys know this. Before we begin, let me just add a quick disclaimer here that all information is for educational purposes, etc., and that we're not offering any kind of investment advice, as you guys already know, right? So, um, now that we've got that out of the way, I'll have one of these printed up tomorrow. Not tomorrow. Tomorrow's Good Friday, isn't it? Um, for Tuesday, yeah. I have one of these printed up. But welcome to Live Room on the 29th of March. Thanks for being here again. And so I want to go into a couple of things today. I want to talk about news trading strategy. Um, Look at this dollar Swiss setup. Just because I had these trades here, and I thought, what are these trades that I've got here that are ready to open? I've got nothing open in the market, just these two here that are they're too open, so I want to have a look at them. So when we spoke again about putting lines in, drawing levels and all that kind of stuff, do you remember we spoke about that already? Yeah. Um, so by the way, before we go into this really quickly, let's just quickly touch on any news that's coming out. Yeah, if there is any news coming out, we should touch on that. So let's go over to Forex Factory and put this in front of so you guys can see this. So it's good to always get in that habit of doing something like this, of having like a routine. So first thing I want to do before I go into the markets is not just jump straight in, hit the buttons and keep going. When I jump in the markets, what I want to do is I want to jump in having some kind of like knowledge of where I am. Yeah, so it's like if you're going to go, I don't know if you've ever seen this beforehand, but it's like do you remember the Gladiators? So the Gladiators, I don't know if you guys are fans of any kind of gladiator shows like Spartacus and that type of thing, but everybody's seen some kind of like, especially if you grew up in Western culture, you would have grown up and you would at some point, I'm pretty sure a lot of you would have watched movies with Jesus in it, and you see the gladiators and stuff, and you see some of them, what they do is they put their hand in the ground and they grab the gravel. I don't know, you might see it with, like, for example, when fighters go into a ring or a cage, and they'll stomp around the place and stuff like that. Or you've seen it with footballers and rugby players. Actually, I don't watch football or rugby, so I don't know what they do. But typically, what it is, it's like you go into your field. So a lot of performers who do, sorry. You actually, funny enough, you say that. So, um, before I actually had my first competition, I remember I went into it was a hall where we competed, and they laid out the mats and everything. And I went in there, had a walk around, and you kind of you want to kind of go into that arena. So it's that same sort of thing, right? So because when you go into trading, you are going to an arena, you are putting money in the line to make money, and you're not doing it against yourself. Even though you're the only thing you can control in the markets is yourself, so it's anything you should be trying to control anyway at any point. But that aside, because you can't control the markets and you can't control the people, but you can control what you do, how you think, and how you feel. That's the most important thing. So anyway, going back to this, so it's good to have a look again just to see what's going on. So we go to calendar. We can quickly have a quick look and see here what's going on today. Yeah. So this doesn't tell us all the breaking news and up-to-date news that's coming out and so forth, but just what we can expect to see for the day. Yeah. So all we really want to look at is the red announcements more than anything else. Yeah. So we've got the current account figure coming out, or has come out this morning, which is better than expected. If you know, it's got a minor figure, so it's deficit. And then CAD news coming out. We've got GDP month for month coming out. That's expected to stay the same. Remember how we read this? It's very simple. We've got the previous, whatever the previous was. It's old information in terms of you can't really do much with it. You've got the expected. The expected is currently priced into the market. So then we've got the actual. We want to see if the actual is going to be different than the expected. Yeah. So these are the two figures then that really come into play. Yeah. And then we've got nothing else for the rest of the day. And then you can see here we've got bank holiday in New Zealand and Australia. And then Friday, excuse me, Good Friday, bank holiday across the board typically. So don't expect much there. And then if we click down here to go more, we can see that the bank holiday still extends as we've got bank holiday Monday. Um, and then that's the news that's coming out, typically showing that it's very uh, it's a low news day, if you like. Yeah, so there's not much high impact news coming out. Yeah? If you click on news, you can see exactly what's being said and so forth. Or if you go to our website, look at the news feed that's on there. Traders Tools, latest news. So all the news that's coming out here, this is up to the minute news, yeah? It's powered by Dukas Copy Bank. So you can see here, 3 minutes ago, gold plummets as expected. The short of the yellow metal continues to book more gains for traders. As on Thursday, additional support levels were passed. Yeah, so it broke through additional support levels. Gold, you know, has an inverse correlation to the US dollar. So typically, when you see gold going down, see US dollar going up, and vice versa. 6 minutes ago, New Zealand dollar bearish sentiment, and so forth. So you know, this is good to see as well. You can see what the Chinese got here 9 minutes ago. Chinese developers flag higher sales to gain rank, and I think what's his name? She something met with what's his name from North Korea as well, didn't he? So that's going on. We've got other things going on in the world, political things and stuff like that as well. We've got going on, yeah. Um, so let's see what Bloomberg's saying. I wasn't in yesterday, by the way. That's why I was quiet. No probs, Rog. Roger, have a good flight, mate. Catching the other side. Don't drink too much in that flight. Right, so what am I doing? Markets. Alright, so here you go. Markets. Stocks regain poise after tech turmoil. Bonds gain. Markets wrap, etc. You can start looking down here and see what's going on. Now, what I don't sit here reading the whole thing because I'm not a long-term investor. I'm short-term. But sometimes it's good to have a long-term view. But you can go down and see what the topics are coming up and stuff like that and so forth. Yeah. And then if you just type in news, typically you should see any kind of news that's coming out that, you know, what you might call like breaking news or what's going on and stuff like that. So you can see here, spy poisoning, highest amount of nerve agent was on door. So this is all to do with that whole thing to do with Russia, which I mean personally I think it's a bit of a BS campaign, an anti-Russia campaign that's going on here. You know, there's no real evidence to suggest it was Russia. You know, other than, I mean, when you think about how you guys remember the 9/11 situation. It's not going to conspiracies, but 9/11 situation. What did they say? You know, we found the passport of the bomber, you know, outside the World Trade Center. You know, the plane got blown to smithereens, the building got blown to smithereens, but the passport made it. You know, it's a bit suspect, isn't it? And now we've got this whole spy poisoning thing, and you know, going on as well. It's sort of a bit suspect, but then that's news that's out there right now that is creating a certain amount of uncertainty in the world. Yeah, and the closer we get to there being a possible World War III, you know, the more risky the markets become also. So you've got to bear that in mind. And that's when markets become too risky, what do investors do? They look for a safe haven asset to invest in. That typically is gold. Yeah, but we live in quite a weird monetary system. So there's a video that's worth you guys seeing, worth you guys watching. Actually, I'll post it. It's called is it Law of Commerce? I think this is it, Law of Commerce. This is the one, Law of Commerce, right? So do you know when I speak to you guys about the markets and stuff? I'm going to post this for you guys, yeah, in the group. So do you know when I speak about the markets and I say to you like, look, we'll look at charts and stuff like that and see what's going on with all the charts and stuff like that. We'll draw lines and etc. But everything that we're doing is based on something that actually happens in the actual market, the physical market, yeah. So a physical transaction takes place. There's an underlying reason to why things happen. It isn't because our trend lines are there and so forth. Even though I'm going to show you some technical setups right now. That's not what it is, yeah. So remember, I want to cover new trading strategy as well, but I want to quickly also talk about this dollar Swiss, yeah. But watch that video called Commerce Law of the Sea. I posted in the group. It's about an hour long. It's worth watching because they explain the language of money. yeah, which is important to understand when you're dealing with money. You know, you need to understand the language of it. I mean, a quick question for you guys is like, you know, had anybody studied algebra at school? Who remembers algebra? Yeah. Now, my question to you is, how many people here in this room today studied algebra at school? Right? So everybody studied algebra at school. Um, my my next question, yeah. Sorry, bear with me. 1 second. Let me just let this guy know. Right. So, excuse me. Apologies for that. So, how many times have you used algebra? Never. Most people never, right? Or the odd time, but you typically don't use algebra. So let me ask you this then: how many of you did a lesson on money at school? Right? Nobody. So what is up with that? Why do we learn algebra but we don't learn about money? Right? It's just like the same way, you know, why do we learn history but we don't learn our specific history? Do you see what I mean? So, um, anyway, the whole point of this is because we're not taught about it, it's no wonder most of the world doesn't really have it. Yeah? Do you see where I'm coming from with this? Yeah? So, if you watch this Commerce Law of the Sea, you start to understand how is it that certain things come about, because you know you go to the bank and you put your money in the bank, you know, but there's also a bank on the river, the river bank, right? That was around before the river bank was around before the bank on the high street, right? You know, the current can be water or electric, correct? Yeah, and the water current flows into the sea, right? So we have the currency, yeah. So it's good to understand that. Anyway, so guys, have a look at that. Do look at that, and then we can discuss that another time in more detail. Now let's go back to the markets, yeah, because I want to go over the news trading strategy with you guys as well, and just this dollar Swiss setup. So this dollar. Any questions so far? Yeah, any questions? Just post them on the chat, and obviously I'll answer the questions. So it's good to have questions as and when we're doing the rooms, because what you'll find is some people ask questions, some people don't ask questions, and a lot of times people that do ask questions are asking them for the people that don't ask questions. Right. So anyway, let's press on. So what are we looking at here? So so anyway, what I had here was this drop here, then I had this base area here, and then I had this drop here. Yeah. So I had drop, base, drop. Yeah. And off the back of that, I draw my levels in. Right. But I was drawing some lines in here. Remember, I said you guys draw some lines in here and stuff like that because on the daily time frame. Let me just get rid of these drawings that are up here. Okay, see that, yeah? Perfect. Right, so obviously we're looking at our pattern. That's what we're looking at, isn't it? I could have sworn this thing had other drawing tools. No, okay, it's fine. Right, so let's take the whole base for this, yeah? Okay, so I'm gonna help you with this one because we would take this small one here. That's what I'm looking for, is that small one there. Yeah, let me just change that one there to blue. Perfect. Okay. Now, on this one here, it's a 58 pip thing, but I'm going to put it above this level here, my stops. Now, do you remember I said to you, for entries, there's nothing wrong with bringing them up and tightening the entries. Yeah? And by all means, do that all day, every day. when you're looking to do this, right? But for stop losses, you need to give them sometimes that extra. Now your stop loss here, as you can see, is 82 pips. So for some of you, you may not want to take an 82 pip risk on your trade. Yeah, it depends on what type of trader you are. Most people here are just doing short-term trading, but sometimes we get these longer-term setups. But we can drill down and see if there's a shorter-term setup in this as well. Yeah, if there's a shorter-term, if there's an entry on a short-term time frame to lessen our risk. Yeah, so let's do this. Let's draw our trend lines. Yeah, so we draw our trend lines in place. Start from here. We've got that going all the way down there, and then what we could do is from round about is it here. Okay, so we're looking to. Now, do you remember I did this the other day, didn't I? I had more than one trend line in place, yeah? Okay, so I'm still taking it from the top. And so you see having the two trend lines in place here. Do you see that, yeah? I'm just going to cut out the wicks on these, but you guys can see that, yeah? So I've got two trend lines in place. And again, remember the question we had last time is, well, which one do you go with? Which is the correct one and so forth? Well, I'm not trading off the trend lines. Just so you can understand that. I'm not trading off the trend lines, yeah? Right, so I'm drawing them in. Remember what we're doing here. We're not drawing these in and then, you know, getting wet because something looks like, oh look, there's a trend line. We don't trade off trend lines. We don't do that. So we have to always stick with what we do. Our core principles of what we're trading. We're trading supply and demand. The markets move the back of supply and demand. Yeah. So let's draw some more trend lines. Yeah. So we draw this one in here. Could also draw this one in here as well. Yeah. So now we've got two here. You guys see that, yeah? And then I'm going to just draw this one in here, touching the highs. Now remember the rules with trend lines is you draw your if the market's going up, your trend line goes underneath. If the market's going down, your trend line goes above it. Yeah. So the question then, from your point of view, is probably then why are you drawing? If the market's going up, why are you drawing one above it, right? And then why am I doing that? Alright, so I'm not drawing it because I'm not using that typical traditional trendline rule. I'm looking to draw some shapes here to see what there is here in the markets. What else is there? Yeah. So, and I'm doing this for instruction, so you guys can see this and do this also to give you more of a stronger picture in your mind of why you're taking the trade. If you've got a stronger picture in your mind of why you're taking the trade, you've got the conviction behind it, you stick with it and you follow the rules to that trade. You don't not flake, you don't change your mind. It doesn't mean that sometimes you can be wrong and you have to switch your position from a buy to sell. I've done that at certain times where I've taken a position, it's gone the other way to what I wanted, and then off the back of that I've been like, you know what, shit, actually I've got this wrong. It's broken through my level, taking it out, it should continue to the upside. You know, I'll cut that loss and I'll buy it. You know, so sometimes that happens. But this is a good thing for you guys to start seeing what's going on in the markets, yeah? So what is it that we have here? So I'm just going to do this, make this blue, yeah? Just to have a different colour to it. Use this blue here. And then this one here the same. Change this blue. Okay, so now we've got aqua. What's that shape that you see there? Anyone, but don't all answer at once. Don't want to be bombarded. Alright, so what we're seeing there is called a wedge. Yeah, so that's a rising wedge. Now, wedges are typical reversal patterns, not continuation patterns. Right, so it's a reversal patterns, which means that if it's a reversal pattern, then what we should be seeing off the back of this is we should be seeing this thing do something like this. Bam, yeah? And then that continues the downtrend, doesn't it? Do you see what I mean? Yeah? So that's the wedge setup by itself. Remember, we're still looking to trade from our supply level here. Yeah? So we still see there's orders sitting here. We're still looking to trade off of here. Now, this move here, yeah, just helps confirm it. Also, what's it doing? It's hitting our trend line resistance as well at the same time, isn't it? Yeah. which if it hits our trend line resistance and fails here or fails here, either way, it's still within that trend line that we've got, yeah, because it's not a perfect one single perfect line. That's not how it works, you know. We're not walking a straight line here, so you get that, yeah. Perfect, cool. So let's drop down and see what else is going on a smaller time frame, yeah. If we have a look now, actually, let's do this. Let's just do this. I'm just gonna do this so I don't see this, yeah. I've done that one already. Do the bottom one. So do you see what I'm doing here? Double clicking, so these dots come up, right click, trendline properties, and I want it to show only on my daily, weekly, monthly, or nothing else, yeah? And again, the same thing here. Same thing here. And then this last one here. Bam, yep. Now when I switch to a 4-hour time frame, it's not on there, yeah? So now, what I've got here is, what you can see is just my level. Zoom in. And right now, what's the trend? What's the current trend in the market? Is it up or down? So clearly we can see that we're in an uptrend, yeah? So, do this. Let's just take it from here. This is what we can see. And what have we got? How many touches have we got? From our first one here, two, maybe even you could say three here. So it's confirmed trend line, right? It's confirmed, yeah? Cool. Now, what is the market doing? Is the market making lower highs, higher lows, etc.? Yeah, we always ask that question. So clearly, that's exactly what it is doing. On the other side of it, if I did that like this, what is that? It's a channel, isn't it? It's a channel, yeah, isn't it? Going up, right? So we've got that channel. I don't want these things visible after this chart here, so I'm going to switch this to 4-hour. That's what I need to be seeing at the moment. And now I'm going to switch to 1-hour, yeah? Okay, so here we are on the 1-hour time frame. And now on the 1-hour time frame, what can we start doing here? Yeah, so I'm just going to, now the information that we need is more here, right? So again, on the 1-hour time frame, what direction is the market going? What is that? It's kind of going up, it's kind of going down, it's kind of going up. On the longer term view, it's a bit of a dodgy drawing there. Let me use this to draw with instead. On this view here, if we do that, we can see there's a slight rise there going up from the lows of this. Yeah, and then we can see the same thing here. So we could say, you know, it's more favoured to the upside than the downside, right? We can see that, yeah, which is in line with our 4-hour. But when we go to the daily time frame, what we have is a different picture. Yeah. So here we are on the 1-hour time frame. If I do that, a bit closer look, shapes, rectangles, and then we want to look and see what's going on in terms of our moves in the market, where we're getting the big moves from. So if I do that, level here, where you see that, yeah. I'm just going to take this one here as well, yeah. So we've got this here, we've got like, these aren't the biggest price bars, but this one here's got a nice push away from it, yeah. It's driven up, it's pushed away. And you know, it's not perfect. Remember, it's not picture perfect. These patterns are not what we're looking for. Yeah, it's not about picture perfect, right? So We could look for a buy trade down here. We could see this thing hit here and continue also. We could see that. Yeah, at the low where this thing pivoted previously. Yeah, we've got a fractal down here as well, which helps confirm a little bit. So we've got that. And we've got some underneath it, but we want to see what's more closest to us. It's on the 1 hour time frame. Yeah, we've not put our indicator up yet, so we'll do that in a bit. And then we go into a 30-minute to see. You don't see much difference in the story of it. This thing here could well come into here. It'll pull back enough to do that. It could have come into here to pull back. It's a nice risk on that one there. So let's have a look from here. You could be looking at a 10 pip move from there before it pushes back up. So let's go into a 15-minute time frame and see. That's looking a bit more attractive in terms of the way that it's pushing in, yeah. But as now we come lower, I feel like I'm starting to see a few more levels in here that I can look to take a move from. Now, any questions so far, yeah? You guys see exactly what I'm doing here, yeah? Perfect, Mundo. So, back to our daily time frame. And this, by the way, I'm going to show you something. This is the reason why. Where's our dollar Swiss again? This is our reason why. I'm looking for clean. There we go. Okay, perfect. Actually, this is why I like these types of 'But that's not that far away from there either, actually. $20 pips. Okay. I'm just gonna paste this. What's my stop loss there? 10 pip stop loss. Okay, so 10 pip stop loss. I mean, I take them all day, every day. It's quite a tight range. 10 pips. It's well worth the reward to risk. Now, if I'm looking for a sell setup, why am I buying it here? It's probably one of the questions you might ask. If we go to a daily time frame as well. Daily time frame. This is what I wanted to do. Why I wanted a plain chart. If I do this, show you something. Do you see that particular price pattern there? Do you see that particular price pattern here? Do you see that? Based upon that now, you could say, hey, this is our move. We have to sell it now. This is our move. Look, that's a blatant rejection. Yeah, do you guys see that? Do you guys know your candlestick patterns? Let me quickly see. I've sent you guys price patterns course on this, haven't I? Shooting stars, trading, yeah. Shooting star definition. This is Investopedia. Got Wikipedia, all kinds of things and so forth. Do you see that? Shooting star. Isn't that the same thing? Do we agree that's the same thing? Yeah, that there and that there, same pattern, right? And that there is a reversal pattern. Yeah, so a shooting star is a type of candlestick formation that results when a security's price at some point during the day advances well above the opening price but closes lower than the opening price. For a candlestick to be considered a shooting star, the formation must be an upward or bullish trend, and the distance between the highest price for the day and the opening price must be more than twice as large as the shooting star's body. The distance between the lowest price of the day and the closing price must be very small or non-existent, right? So when we see that, yeah, pushing up, up, we get the pushing up here, and then we get the shooting star. That's our reversal pattern. Very small or non-existent in comparison to the rest of it, and that is, yeah. Right, breaking down shooting star psychology, shooting stars. So, uh, right, so shooting stars indicate potential price tops and reversals. Okay. Shooting star candles most effective when it forms after a series of at least 3 or more consecutive rising candles with higher highs. As the price rises, buyers get impatient, waiting for a pullback and leapfrog over one another to purchase shares. Eventually, the buying frenzy hits a peak as the last of the immediate buyers jump into the stock or financial instrument in a greed-driven panic to mark the highest high of the preceding series of candles. Psychology is the earlier buyers eventually begin to take profits and short sellers enter into the stock, causing an immediate price drop after hitting a new high. The candle closes with a wick or shadow is at least twice the size of the body. The wick or shadow represents the buyers are immediately underwater as liquidity starts to dry up. Think about language. Buyers are underwater as liquidity starts to dry up. Remember that commerce, language, law of commerce, it's all about the language of money. Yeah, so it's good to understand that. That's why we have things like liquid assets, frozen assets, and things like that. We're using terminology of nature to describe these things, right? So this is the potential shooting star candle. The very next candle will form whether it's a shooting star continuation candle. So basically, what does it say? Nothing really more to add there. It's basically what it is. It's a reversal. Right, now, what time frame is this? Clearly, we look here and we see that's a daily time frame, yeah? Daily time frame, okay? Which means that this hasn't completed yet, it's not finished. So that's not a shooting star yet, not until it's fully closed, yeah? And it doesn't fully close until the markets close. Do you understand me? So it's only going to be like at 10 p.m., 9 p.m. 9 p.m. US market shut, and that's considered the whole trading session is done, and then we start the new one again at 10 p.m. with Tokyo, the Australasian markets, and so forth, or 9 p.m. with Sydney. Do you understand me? Yeah. So off the back of that, this isn't formed yet, so we can't react off the back of it. Yeah. That's important. You don't want to get into a trade and be reactionary to what's going on in that way. Yeah. It's not closed yet. We don't know yet. Okay. So what we've done is identified a selling opportunity here on the dollar Swiss, yeah. Okay. This one here is not from this time frame. I think it's from the 1 hour. Let's do that. Cool. Coolio. Any questions on that so far? No. No. If any questions come in, I'll answer them. I take it you guys understand this fully. Right. Cool. So now what we want to do is we're going to drag our indicator that you guys all have that I sent you. Alright, let's take this one here. Boom. Let's put that in place and see where that matches up or adds up to anything that we're doing. Yeah. Okay. This is why I like you guys to get into the habit of this, because what you'll notice about this, what the patterns that it finds actually is one specific type of pattern. It's an algorithm. That's why. Yeah. So let me show you this to you. It is looking for drop, base, rally, base, drop. So why are we not seeing it give us rally base rallies and drop base drop? Right, because it's kind of strange for an algorithm to do that. It's a difficult thing to program, so it doesn't do that. But that's a drop. There's a base, right? And there's a drop again. Anything wrong with this? No, but the indicator doesn't pick it up, yeah? But it's good to have the indicator in place as well, also, yeah, to give you a little bit of extra confirmation if you need it, yeah? But this here, to me, looks like a nice sell area. and I can have that 7 pips, right? So I can have a 7 pip stopping that. Let's move that up there for now. Perfect. Okay, cool. Get there. Why? Because I'm simply trading that pattern there. I like that pattern there. That's nice. Even though that's why I like you guys to draw them in, so I can start showing you, um, how to identify these better. Because the better you guys become, the easier my job becomes as well, right? The more independent you become, the easier my job becomes. Because if I can teach you guys, if I could teach you guys how to do this in a day, and you could just get it in a day, that'd be brilliant, wouldn't it? And I would, because then you guys would just get on with it. Do you see what I mean? But at the same time, I understand there's a process to learning. We all do. So that's why I say any questions you have, always ask the questions that you have. Yeah. Cool. Perfect. So, and we just follow it on the same analysis we do for all our charts as we go through, seeing what's going on in the markets, what's playing out. Again, you don't have to do a daily every single time. Yeah. But look at that. That's something we drew in when a few days ago it must have been, and that's today's candle. So do you see how it works? It does do that. Yeah. What you have here is not a perfect level, but this is still considered a reversal pattern as well, which typically means that there will be some form of supply and demand, but you can't see it on a daily time frame. You've got to start drilling in and drilling in, drilling in. When you drill in, they separate the price bars. Do you see that? Yeah. So if I do this, you're not going to see which one it is, but if I do that, no, you see the two that it is. If you drip down to 4 hour, you see what's going on between them. Do you guys see that? Yeah. So inside of that move there's a rally, there's a base, and there's a drop, and there's a drop, there's a base, there's a rally. Do you understand me? Yeah. Then there's a rally, there's a base, there's a drop. So what you start seeing, if we decide to put these patterns in, yeah. So if I take that there, let's draw that across. Yeah. So remember, I'll shave off to the entry, but not for the stop. Yeah. It reduces the risk, but what does it do? It comes back up, it comes in, collects orders, rallies off again. Off the back of that now, where you've got this one here, shave off this wick at the top. I won't shave off the bottom. That becomes my new level. Right? On the daily time frame, we didn't see none of that. We saw this. We drawed into the 4 hour. If I did this, the wedge pattern still becomes visible. Of course it does, because it's 4 hour to daily. There isn't as much. The only thing that's the biggest benefit more than anything else is you can start drilling down, yeah, into it, and doing things like that. You've got those choices and options, but you want to get into the habit of doing that. Is this helping? Is this making sense and so forth? Yeah. Just let me know. So with that, you can start being a bit more pinpoint of your entries. You've got this here, drop, base, drop. You've got it there. Insert. Yeah. Do that. If I take just the wick on this one here to reduce the risk, look for a sharper entry. It might mean you don't get filled in all of them, but such is life, right? And remember, a lot of times when I do this, I use a certain amount of discretion. So I'm getting the low of that particular body. You see the body there? I'm looking to get in here. This will be my sell here. My stop loss will be above it. That would be in line. Now, how does that work out in line? Because this is just like stabilized, like a rough guide that you can have, that you can use, yeah? So if this goes up, and goes up, and goes up, and goes up, and goes up, it doesn't go up like this, does it? It goes like this, right? This is what you'd expect it to do. So if it comes here, and then comes here and sells off, what's it doing each time? It's that consolidation range that's going into place. So you start, these lines help you see what's going on in the markets, and then you can start drilling a bit more and so forth, and then seeing where like this is a nice level here. Yeah. What's the market done? It's come in, it's rejected that level there. Do you see that? Yeah. You would have the whole. I mean, remember I shave off the bottom, but if I was taking the whole thing there like that, for me it becomes higher risk. I like to drill in a bit more. But back to the daily time frame, you don't see those things. Yeah. That's why. But you start from the daily, you drill in, you start to get a bit more of a viewpoint of what's going on. you zoom in, yeah. So um, now let me, if there's no questions on that, let me just find a clean chart with nothing on it. Chart, plain. And what I want to go through with you guys is the news trading strategy. Yeah. So I want to go through news trading with you really quickly, cover that because then what we'll do is on Tuesday let's go into fractals. Yeah. So but today let's go into news because news sets up a lot of good trading opportunities for you guys. You can make some money and earn some rebate out of it. You might as well. It's done in the 5 minute time frame and it works really well. And all you do for the news trading strategy, it's just this simple, yeah. So you simply go into your FX calendar here. Time is set correctly. Calendar. And then you just look through and see where the red news announcements are. So let's imagine this was the beginning of the week, yeah? And then I'd say, okay, beginning of the week, I can see that I've got news coming out here for the US, high impact news, yeah? For example, yeah? At 3 p.m. US dollar. So I say, what's my dollar currencies that I can trade at 3 p.m., yeah? That's what you want to know, what you're going to trade. So you want your dollar currencies. Which are your dollar currencies going to be? If you wanted to trade just a dollar, the closest thing to it would be the euro dollar. For just a dollar. Yeah. Another currency you can trade for dollar impact news is this one as well. Another one you can trade for dollar impact news is this one as well. And then there's this one as well. USD CHF. Dollar Swiss, yeah. And then, I mean, obviously, if you go through and you can see more of them, you know, the Aussie dollar moves in line with, the Aussie dollar does move in line with, what's it called? With the euro dollar and the pound dollar, yeah, because the second currency in the pair is US dollar, which US dollar is the most dominating currency within the currency markets, right? It has the highest, it has the highest, you know, market share, yeah, the high share of the market. So, and so you can go through. There's others that you could trade that you could look at. Dollar CAD is another one, yeah, and so forth, right? So I've just listed some. So we take the euro dollar in this example, right? So let's imagine now that the news has just come out. Is there any news coming out right now? I should have checked that, shouldn't I? Really? Okay, cool. Thursday. No, at 1:30 news is coming out for CAD. All right, so you can CAD GDP. You can trade this for the CAD news. CAD GDP, right? Dollar CAD. So it'd be the same thing. It'd be dollar CAD that you'd be trading with that CAD news, yeah. Be the same thing. Let's imagine that this 5 minute candle. Let's imagine this 5 minute price bar, yeah, is the news that's just come out, yeah, and it's created this 5 minute price bar, yeah. Now, typically it'd be a lot bigger than this. If we measure this here, it's 4 pips. You would need it to be 20 pips as a minimum in terms of range, yeah. A minimum 20 pips. You want to show that it's had some movement out of the market, yeah. That's what you'd be looking for. So if it's uneventful, it's uneventful, yeah. Now this isn't a real news trading candle, but let's imagine that it was. What you want to do is you want to take the high. Now there's two ways to look at the high of the candle. Yeah, one way is to just put it above the high here, and then put it at the low here, and take that figure at the right hand side of your screen. Or what you can do is if you hover your mouse on it, and then you look down. Yeah, so I'm going to show you where to put your attention. Yeah, I'm going to show you where. It's in this area here, okay, that you want your attention. So as I put this over one of the price bars, I want you to just hold your attention on that, yeah? Do you see what you see in there? Yeah, so you want the OHLC. So you want this OH, open and high. Yeah, so back to this here. I've got the open and I've got the high. Do you see that? Yeah. OH. These are two figures that we're looking for. Nothing else, right? So I come here. I can see the open and I can see the high. Now the open is at one spot 23266. Yeah. So what I want to do is place a trade here at one spot. What was it? Sorry. One spot 23266. One spot 23266. One spot 23266. But we want to add 3 pips. So that's going to be 9.6. To the upside, we're going to add 3 pips, yeah? So there you go, 3 pips to the upside. That's what I'm looking to get in as a buy trade, yeah? So now I could go ahead, and right. Let me just get rid of that. And right click, trade in. I could put my buy stop in there if I want, yeah? And then I'll do the same thing to the downside, yeah? And I'll say, look here, I'm going to take the low price of that, yeah? If I put it here, I don't have to have the crosshair on, I can just do that. I can see the low at the bottom of the screen, or even as it opens here, the low is one spot 23247. 23247. 23247. I'm going to take away 3 pips from here. You can ignore the last digit, last decimal point. Let me delete that. Let me just see something. Have I done this incorrectly? 23288. 23288. 23288. That was my mistake, so that should be 318. If I add 3 pips to it, do that. That looks a lot more like it as well. Yeah. So this is where I'm looking to get in and out of my buy and sell. Yeah. On this, I'm looking for a breakout of this here, see up or downside. So what I would do is I would right click, trade in, buy stop, right click, trade in, sell stop. So I've got my 2 orders in place here. Yeah. Now what I'm going to do is I'm going to put my stop losses in place for this particular trade setup. Yeah. So I know where I'm getting in. I can go ahead and remove this so you guys can see the orders in place. It might help you a bit more. See the orders in place. Now I want to just put a stop loss in place. Where does my stop loss go? It goes on the other side of my. So for my buy, excuse me, for my buy trade, it goes on my where my sell stop is. So if I know I'm buying here, my buy stop is here, my sell stop is here. That means my stop loss. So this is my sell order I'm looking to get in. My stop loss will be my buy stop. So one spot 23319. One spot 23319. Yeah. Bang. Now my sell stop has a stop loss in place. Now my buy stop needs a stop loss in place. So I'm going to put my sell stop figure in there. 23217. Modify. Yeah. So now I've got stop loss and a sell stop in place. Yeah. Stop loss there and a sell stop. Buy stop and so forth, yeah, in place, yeah? You can see they're both in place there. Oops, excuse me. Excuse me. Where is it? These 2, yeah. Nope, not these 2. Euro dollar, this is euro dollar, yeah? These 2 here. You guys see that, yeah? So they're in place. Now, what you're looking for is a 20 pip target on this, okay? My risk on this particular trade wouldn't be 10 pips. If the range has to be 20 pips or more, it'd be, at the very least, it would have been about 26. Yeah. So you see that your reward to risk ratio is going to be out on this. The only reason why you do this at this reward to risk ratio is because of the accuracy of the strategy, the hit rate of this strategy. Because the hit rate of the strategy is so good, that's the reason why you would do that. Yeah. So, what am I looking for? For my price here, on my buy trade, yeah, I'm looking to add 20 pips to my price here. So this would be one spot 23519, extra 20 pips. and then my sell one I'd be removing, I'd be taking away from here 20 pips, so that'd be 23017, like that. Modify. Now if I come to my 15 minutes, or say 30 minutes, to see what it is, what it's doing, so you can see where I've got my sell stop and my buy stop, etc., in place, where I'm looking to get in and get out on the back of this. This would be only for your news trading strategy. So what you want to do at 1:30 is you want to go to dollar CAD, USD CAD, dollar CAD, 5-minute time frame, yeah, and you want to be looking to trade on dollar CAD. You want to be looking to trade your what's it called, your news trading strategy, yeah. Any questions on that so far? On trading that news trading strategy? Perfect. Okay. So a lot of people, what they do with the news trading strategies, they do different things whereby, they like to, for example, do you buy and sell stop after the news has taken place, so at 1:35 p.m. Yeah, that's absolutely right, Jay. So what Jay just asked, what did we do this on? Euro dollar, wasn't it? Euro dollar, yeah. So on this euro dollar trade here, what Jay's asking about is when do we place this? So on the 5-minute time frame, because this was our news candle here, so I'm going to mark this on this and place something around this so you guys can see it more clearly, so you know where the news came out. Yeah, was it this one that we used? Yes, it was. It was this one that we used. Yeah. So this one that we used. Yeah. This was the candle. We're going to imagine this was the candle came out at 1:30. Yeah. Okay, it's 1:30 candle. Then that would mean, okay, that the next candle, sorry, we took it off of this candle here, yeah, because this is when the news came out. So this now at 1:35 we had this candle. So this is 1:30 news candle, which meant news came out at 1:30, the market moved around, the market candle closed at 1:35, and then the new candle opened in this side here. So yeah, you're absolutely right, that's correct. That is exactly how we do it. Yeah. Alright, perfect. So what we'll do, 5 minutes till 1 o'clock, so wrap up here. Good time to go and have a bite to eat or something, which is what I'll be doing now. Look at this. Before we do, let's look at this. See that? Look at that. What does it do? It drives in, collects it, and drives back out again. Always say to you, have your stop loss 3 pips above your entry. You got that buff up when it does push just above it. It just happen, yeah. And what you do, sells off. If your entry would have been here, right now you'd be up 5 pips. Not bad, right? These levels, they work all the time. They're the best in the world, as far as I'm concerned. And breakout strategies. Trade your breakouts. Breakouts are really good. There's a real good purpose to trading breakouts, so you understand, by the way. Breakouts teach you about breakouts. London Open, New York, Tokyo. They're not the only breakouts that happen in the market. There's breakouts everywhere. So if we're looking at the trade that we was looking at on dollar Swiss, for example, on that daily, we are looking for a breakout trade in this, because this wedge pattern is consolidation, consolidates, and then breaks. Because it's a typical reversal, we're looking for a break to the downside. But it's good to understand breakouts as well as supply and demand. These your key strategies you want in the markets are these ones. You don't need anything else, right? We talk about trading trends, looking at trends, defining trends, because we want to trade with the trend as much as possible. I prefer this trade as a sell more than a buy, because it's with the overall trend. As they say, the trend is your friend till the bend in the end, so stick with it. Alright, cool guys, if there's no questions, we'll wrap up here. I've recorded this, so I'll post this out for you guys, and then what we'll do is we'll do the next live room will be on Tuesday. On Tuesday, let's talk a bit. Let's do a bit on fractals for you guys. It'll be good because we couple that with our supply and demand fractals, yeah. And then if there's any specific subjects that you guys want to go over in the live room as well, let me know. Just send me a WhatsApp or whatever, just saying like, listen, I'd like to discuss this or discuss that, whatever it be, and we can do that as well. Yeah. All right. Cool. Perfect. Thanks, guys. Have a good Easter. No doubt I'll speak to some of you guys during the day anyway today. If I don't speak to you, have a great Easter. Don't get too drunk and so forth. Eat too much chocolate. You know, and I'll speak to you guys. Those that I don't speak to today, I'll speak to you guys after the weekend. Thanks, guys. Bye now. Bye.